Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. Take a look at these markets from a neoclassical perspective. And if you don't know what I mean, what I'm talking about is supply and demand on the charts. We use that to determine timing, direction. That's neoclassical. That's what we do. We educate. We teach people how to do that. And if you want to have somebody feed you, that's one thing. If you want to learn how to feed yourself, that's another, and that's what neoclassical is all about. As far as what happened with the markets today, we'll take a look at that. And I do this show 4 times a week, every Monday through Thursday. It's broadcast at before 10 o'clock Eastern Time. It's archived on YouTube. And it's under the channel, L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner. Anytime I push content publicly, you'll get a notification. Here's the numbers. Had some big moves over in Asia and decent gains for the most part in Europe. But those gains we had here wouldn't stick, and we started to see them sell off, and we finally see a crack in this Trump rally. And I'll show you what I'm talking about that. Even though we had that happen today, we had a couple other things taking place that kept this market from really crumbling. And that is we had oil take off on the OPEC news, up 8%. On OIL, on the WTI, it was almost 10%. We had gold sell off again. We had bonds sell off again. We had the dollar moving higher. That led to more rotation inside this market. Energy sector, of course, was strong. Basic materials and finance. Those were the strong ones on the day. So let's take a look at what this market looks like. And what we're going to look here to start with the S&P. Now, again, when I talk neoclassical, you're not going to hear other people talk about this. Look at your test of your high, right? Take the price point. 2213.35. Where did we go to? 2214. In other words, we went over. How did we do it? With volume. You go over with volume, you're probably coming back. So if you're a bull, that's a good thing, right? You left some volume up there on the test. And that's what you want to see. Now, some people will say that's volume coming off the top. Well, yeah, that's kind of slicing and dicing. I don't think I would name it that. Volume comes off the top when you don't go up and test and you just come roaring back down to the backside. So you get some volume, you leave some volume up there, that's good. The bad thing, you test back over these last 2 or 3 and you can't hold, you get a hanging man from a candlestick perspective. That says you're probably going to trade lower. So then you have to think where you're going to trade to. You got a swing point high over here. That's the first place you're going to see this thing try to come back to. If you go look at these big bars, one of them's right there. So I suspect what you're going to see is it come back into this area. Now, neoclassically says, when you do the slice and dice stuff, that when you come back, if you come back after more than 6 bars since you did a swing point break. Where's the swing point break? Well, it's this green arrow that you see right here. So that's 1, 2, 3, 4, 5, 6. So we have 6 bars here. So when we come back into this area, we're going to see more than likely high probability that first third of the test of this prior swing point high is going to be the buy point. And wouldn't you know it, it lines up, the bottom of that test lines up pretty close with this big bar's high, right? Guess where it's coming to, folks? That's where you want to be buying. So that's the S&P 500. That's the way it looks as of tonight. Let's go over and look at the rest of the market and see how that shakes out. And what we're looking for is consistency across these markets. So when we look here at the NASDAQ, you have another tell that's telling us that this market wants to go lower. This is a bearish engulfing. So in other words, you take the entire body of the candle, you engulf it with a dark body, in other words, to the downside. Volume not expanding that much, but the other thing this thing did do, and which is going to be very interesting come tomorrow, is it traded right back in to these prior swing point highs. Now it came back within 6 bars. That says that you should test fully the bottom third of that area. So in other words, down here, and that's where we went to today. So now the test tomorrow is, can you hold this area? My suspicion is it's not going to be able to, but we'll see. I suspect it's going to try to trade into these bars. The overlap is right in here. This could trade as low as that area I just highlighted. If we look at the NDX, now the NDX, of course, has been the weak link in this rally, and today it does a bearish engulfing. Notice that even though all the other markets had gone up and hit new highs, this one failed to get to new highs. Bearish engulfing, same setup. It's already into the bar with the volumes, already into the other one. What's it going to try to do? Well, since it's the weak link, it's going to try to go the overlap of the other side, which is way down here. Finally, the strength of everything is the Russell, the madcap Russell. So what does it do? It has volume as it does its push. As it comes back down, where is it going to try to trade to? Well, since it's the strongest, you're going to look for overlaps, and I think I pointed this out last night, of these key areas. The retest regions are way down here. I suspect it's going to be hard to get that far. I think this area at worst, you may even see as it comes back into this area, even that one being bought. So that's the Russell. That's the way it's retracing. All of them suggesting a little bit more to come to the downside. And so you don't have to be in a rush to run out and buy these. That was one of the questions we were dealing with coming into this week. I had told members on Sunday I expected this week to be sideways and that we shouldn't expect it to push up anymore. We're going to get some consolidation, and that is what we're getting. I'm going to move over to Europe, see what these guys are looking like. I haven't looked at them in a while. And yeah, it's really nothing. It's just congestion up there. Look at it, Switzerland. Looks the same, congestion, just consolidation. So really nothing there. One thing I've noticed is that Shanghai has been very strong. You know that all the others have been struggling, but Shanghai has had a nice run. If we look at it, pull over the weekly on it, you know, this thing got over a key area here on this swing point high and has pushed higher. Decent volume coming into it. I don't know exactly what's happening in Shanghai, but they are surprisingly stronger than I would have expected. Now, when I talked about the indexes, we can't, you know, totally ignore what's going on elsewhere. And so I want to show you some of these sectors. Biotech to start with, IBB. Biotech gets under this bar and stays under it. That's the big bar. That's unfortunate because that says this thing's going to try to trade lower, and that's a bad thing. You know, maybe they'll fool me and they'll get a bounce here, but biotech looking pretty weak. The stocks starting to roll over as well. That's a big piece, of course, of the technology group. I noticed that the ITB caved in today with the big bearish engulfing. That one wants to retrace. And you can see it across the number of these where they go up and do their thing, and then, of course, they start to trade back the other way. XLK is another example. Big bearish engulfing there. Utilities a bearish engulfing. Actually wasn't a bearish engulfing, just came off with volume. Same thing here with the XLP. Right now, these are late sector type sectors, so you know I'm not freaking out about these. I'm just saying, hey, there's not uniform strength across this market. There's strength in some places, and it's not in others. One of the places you have had strength is industrials, but this one has played out its ABCD structure. It went up and tested the top. If we double that volume, that's about 8 million on Friday. You do 15 today. That's a good thing. That says that thing will try to hang and try to test again. Financials were strong today. I talked about that. You get a little doji top. Tomorrow will be key for those to see whether that doji is a top or a continuation. Energy, of course, big volume. OPEC meeting. They come out with an agreement to reduce the oil glut, and you get a big bounce off of that. And as I mentioned earlier, basic materials continue to be strong as well. So you got mixed picture on your sectors. You have bearish engulfings in some of them, and you have some on the indexes. What that tells me is that we're going to try and trade this market lower in the coming day. I would expect that happens tomorrow and potentially even into Friday. Now, Friday is the unemployment. Tomorrow you get a lot of industrial numbers coming out. We'll see if any of those make a difference. But there is enough news out there potentially to move the market. Last night I mentioned FCX as a trade. Basic materials were strong today. FCX popped up. It was up about 3%. We talked about this yesterday, buying into this bar. You know, in Neoclassical, a lot of it is about timing, right, and putting the odds on your side. And when we see something like this and we see a test into it with lighter volume, you have to expect that's where the buyers on a strong market are going to come in. And that's what they did. They came in, they tested into it with less volume. What do? They bounced today. Now, they got a doji today, and we took some partial profits on this bounce. You know, you don't argue with 2-3% in an overnight situation. You take some of the money. If this thing does dig deeper back into this, that will be the next place they buy it. And that might be the last chance you get at it on some sort of a retrace. Potentially, as I said last night, it could come into this area. But this is a strong move, and you got to make hay while the sun shines, and that's the way that one looks. I want to point out one other one that was interesting today. This was off of earnings. I had told members, I have a mentor group that I meet with each morning. We have mentors that learn the Neoclassical and then help teach others. And what we did this morning was we looked at ADSK. This is a stock that we've traded. You know, I'd said this morning before the market opened that we could probably trade to about 72. That would be back into swing point high. I would expect the buyers to show up there, and that this thing could trade as low as 65 over a longer term basis. And what do? They jam it in there. They got a lot of volume. They hit this thing. They hold those swing point highs. The reason I thought it would hold is because this swing point high has not been tested for more than 6 bars. When you don't test, right, the breakout was here. When you don't test for more than 6 bars, in this case it's been way more than 6, that says the first time back, this thing should hold. And not only should it hold, it should try to produce a bounce. In other words, we should see some sort of a bounce back up here. But don't be fooled. This is going to try and trade lower, and I suspect you're going to get a better buy if you want to buy it really for a longer term perspective. I think you're going to get the better buy back off this swing point high on some sort of a deeper retrace that probably takes place. We'll have to wait and see if that plays out. That's where that 65 number came from. That's Neoclassical in a nutshell, folks. Tomorrow, look for some more retracing. This is a bullish market, though. It can turn on a dime. It doesn't take much to turn it. I do believe we're going to get a lower set of prices to work with, which is exactly what you want. Find some stocks. Find some key areas to wedge into those and make some money on the upside, because there is going to be more upside in this move after we consolidate. Have yourself a great night, and I'll see you next time. Good night, folks.